Yes, good morning, students. So, how are you guys? So, students, yesterday we had learnt mainly about the advances, about verification of advances while auditing uh, accounts of a bank, and we had also discussed some general things about bank audit. We had also discussed about concurrent audit, LFAR, and other related aspects. Yes, good morning, Kaushiki. And today we shall be doing about remaining about how to verify uh, remaining categories of assets like cash and bank balances, like investments, like fixed assets and other assets. Okay, so is that fine? So we shall be starting with cash and bank balances and money at call and short notice. So this is cash and bank balances. This is one of the usual items, guys. As you know, you find in every balance sheet, and banks are no exception. So cash you would find almost there in balance sheet of every branch. In almost every branch. Okay. Because it is because of the nature of working, customers deposit cash and they withdraw cash, and cash in hand remains at the day end. So what is the objective of auditor in verifying cash balances? Objective of auditor is uh, to obtain assurance about the existence and completeness of cash. He is basically verifying these two assertions. Okay, so how he would be sure about the existence of cash? What procedures he would be applying here? Obviously, the best procedure would be a verification of cash physically. As at reporting date, and if it is not possible to verify the cash as it close of the reporting date, it may be verified on the next working day before start of business hours. And even if it is not possible to verify cash on next working day, then cash should be verified as near to as is possible near the reporting date. Okay, so clear, guys. And cash also includes, remember that cash also includes here cash in ATM, which may be attached with the branch, and cash in cash deposit machine. Okay, so as you know, these days ATMs are almost attached to every branch. So cash which is there, which is coming in the GL of the branch, it includes balance of cash lying at ATM. This you have to remember. Okay, guys. So, and what about the controls in respect of the cash? So you have to understand that there exists a very stringent internal control system in relation to cash in banks, because it is a sensitive monetary item, and it is liable to misappropriation. So cash is maintained in effective joint custody of two or more, at least two responsible officials, and it is kept in safe in the branch premises, and it is also checked periodically by the higher officials, not only by the branch incumbent but also by controlling authorities on a surprise basis. And they make, when they do such verification, they also mark in the daily cash register of the branch that cash was verified by the auditor can verify all these aspects, and by doing so he would be getting assurance that in fact controls relating to cash are operating effectively. Okay. And students, once cash is physically verified, it has to be reconciled. It has to be reconciled with the figure appearing in daily cash register. So there is uh, it may come under different names in different banks, but the purpose of it is the same. It contains the opening balance, cash receipt, payments, and closing balance, and it shows denomination of different notes which are held by the branch. Breakup of cash. Okay, so it has to be reconciled. Physically verified cash has to be reconciled with the figure shown in daily cash register, and also with the GL, with what is appearing in the GL. Okay. Yes, guys. Is that clear? Fairly simple. And what about bank balances? Now we come to bank balances. And before we move on to bank balances, guys, let us GL, Kaushiki, GL is general ledger. Guys, don't be so innocent. You are in your finals. So at least these terms, these basic terms, you should know. So let us also see what LFAR has to say about it, about cash. So guys, I had requested you to go through LFAR, to go through the format of LFAR, although it is not in your module, but just for the sake of having your of increasing your level of understanding, of increasing your level of knowledge, I had asked you to go through LFR. Have you gone through? Yes. Namrata, Kaushiki, anyone? So because the purpose of making you go through all this was when you go through these things, obviously a picture is created in your minds, and your it would be rather, I would say, hard for you, it would be difficult for you to forget it. Your mind will not let you forget it. Okay. So what does it say about cash? What questions are to be asked? What questions are to be answered by the auditor in respect to cash? Like, does the system ensure the cash is maintained in effective joint custody of two or more officials as per instructions of controlling authorities of the bank? So this is what the internal control is. So simultaneously, guys, as we are learning about audit procedures in relation to cash, we are also simultaneously doing internal controls. We are also simultaneously doing going through reporting requirements in LFAR to enhance our understanding. Again, I am repeating it. LFAR is not in your module. The detailed LFAR is not in your syllabus even. But just if you go through it for say half an hour, you get an idea of the things. Okay. And point number 2 is, have the cash balances at the branch ATMs been checked at periodic interval as the procedure prescribed by the controlling authorities? So this is again one of the internal controls. And not only we are covering LFAR, I am also discussing about aspects of concurrent audit simultaneously. Now it is also the duty of concurrent auditor to verify cash. He also makes surprise verification of cash, and he also satisfies himself about the effectiveness of controls relating to cash. So simultaneously, you are also learning about the duties of concurrent auditor. If he finds anything unusual, he has to report it. Yes, Namrata is saying the questions are a little bit similar with concurrent audit report I read in office. Yes, that's good, Namrata. You have to correlate the things practically. Whatever you are learning theoretically, you have to link the things practically. You have to apply them in practical situations. Where it is coming, how it has come here, what is its relevance, what is its significance. And say students, once you understand the concept of a term, of concept of something, it is necessary to learn its importance. It is necessary to learn its significance. Say once you understand its significance, almost 70-80% of your work is done. Any damn question you can answer if you understand its meaning and its significance. Okay. And one more request to you guys is, please, while you are preparing, students, kindly do not adopt a question based approach. While preparing, do not adopt a question based approach. Today I have done 10 questions. Today I have done 5 questions. This is not going to help. Such an approach is not going to help you in exam, students. You have to understand and learn the concepts. Questions will automatically follow. Once you gain clarity, questions will automatically follow. It doesn't mean that you do not have to do questions, but simply without understanding the concepts, for the sake of doing questions, for the sake of doing number of questions, you maybe just wasting your time, because in every attempt fresh questions are being asked. Only say 5-7% questions may be repetitive type, but in every attempt questions are being asked afresh, new questions, new application based questions. Okay, so this is you have to understand the concept, and then you try to attempt few questions of different kinds, and independently without seeing the answers. So when you when you attempt the questions independently without seeing the answers, then you can understand about your thought process. Okay, and then you correlate your answers with the what is the ideal answer, what is written in your module, or what is written in your RTP or suggested answers. Okay, so this is the right way of preparing for an exam, not only for auditing but also for other exams. Okay, and see, does the branch generally carry balances which vary significantly from limits fixed by controlling authorities of the bank? Now this is another concept. Say this is uh, there is a cash retention limit. There is a concept of cash retention limit in case of banks, in case of branches, where an ideal limit is set for branches uh, to hold a cash up to that amount, and that cash limit varies with the deposits. Say 0.25% of deposits. So it is not to be as such. It is not strictly followed, but it it is a sort of benchmark. It is a sort of yardstick to the branches to hold cash around that level. Branches usually hold cash even in excess of that limit. Okay, sometimes it happens, but the auditor has to report whether the branch generally. So you see in LFAR there is a word generally. Maintain cash balances which significantly vary from limits fixed by controlling authorities. Like you should see that whether in a month, at least in out of 30 days, in 25 days, the cash is exceeding from the prescribed limit of the of which is known as cash retention limit. So now this can be also one of the audit procedures while doing while conducting concurrent audit. Okay, so such kind of things. Clear, guys? Yes. Yes, students, is that clear? Now we come to bank balances. Now bank balances can be these can be balances with RBI. Okay, and balance with other banks. So normally, students, branches won't be having any bank account, and this would be in most of the branches. This clause would not be applicable. However, at the overall level of bank, balance with RBI could be there. Balance with other banks would be there. Okay, so normal audit procedures like in other cases also apply here, like obtaining balance confirmation certificate. Like the balance is reconciled whether bank has prepared reconciliation statements, and what are the important aspects to be taken into account while going through reconciliation statement. Look, there might be like in case of balance with RBI, it is possible that there might be some debit or credit entries which remain unresponded. So if these are, say, uh, if these remain unresponded for more than 15 days, then obviously it would be verified by the auditor. Okay. Or if there are some revenue items remaining unresponded. So what are revenue items? Say like some charges have been debited, but the bank has not accounted for the same. Similarly, there are some credit items, income items which have been shown in the statement of RBI, but these have not been accounted for by the concerned bank. Okay. So these kind of things, or any cash transactions remaining unresponded. So these are just like the things you see while going through cash, while going through bank reconciliation statements of other entities. But here you would have to examine bank reconciliation statements from the point of view of the operations of bank, from the point of view of working of bank. Okay. So these 3 points are there also in LFAR. So let us go through LFAR also. Like this. Balance with RBI, State Bank of India and other banks. Okay. So were balance confirmations certificates obtained in respect of outstanding balances as at year end, and whether the aforesaid balances have been reconciled. So this we have already done just now. It relates to bank reconciliation statement. Oh, sorry, it relates to bank confirmation certificates. And if there are differences, then reconciliation has to be prepared. And these are the main points: cash transactions remaining unresponded, revenue items requiring adjustments, other credit and debit entries remaining unresponded for more than 15 days. So these kind of things. So students, the point to remember is that that in case of most of the branches, they won't be having any balances with RBI or other banks. However, in case of branches handling treasury operations, okay, which is usually done at the head office. Okay. So what are treasury operations? We shall be coming to it just after some time. So in case of those branches, balances with other banks and RBI is maintained, and this requirement is applicable there. Okay. Clear, guys? And similarly, if there are balances with any other bank, you can verify reconciliation statement on these lines. So now we come to investments. Yes, students, very important point, investments. Verification of investments. What should be the audit approach? What are the audit procedures? Yes. So what do we mean by investments in case of in the context of financial statements of a bank? Yes, students. Have you any idea? Yes, Kaushiki, Namrata, Janvi. Any idea? What is meant by investments in the context of financial statements of a bank? Yes. No, Kaushiki. No, Kaushiki, you are wrong. Kaushiki, you are saying loans and advances given. No, advances we have already uh, done yesterday, and investments have nothing to do with loans and advances. Yes, Namrata, yes, you are coming to the point. She is saying SLR investment. So students, you have to understand that investments are the second largest item usually in the balance sheet of a bank after advances. So advances तो होंगे ही बैलेंस शीट में, क्योंकि बैंक का काम ही एडवांस देना है. It's the main function of the bank to lend money. But after this advances, second most important item in the balance sheet of a bank is investments. Now, why do banks make investments? Say, one of the reason of making investments is in compliance with regulatory guidelines. Now, as Namrata is saying, SLR investments. So, as per RBI guidelines, banks have to maintain certain ratios, which we shall be doing later. And for purpose of maintaining those ratios, they have to make investments in government securities. Okay, in government securities, in bonds. So, and these are not the small amounts. These are huge amounts. Considering the size of balance sheet of a bank, these are the huge amount, guys. So there is a separate department in the banks which handles these functions. So which department handles these functions? Yes. Yes, can anybody tell? Yes, Jay, Janvi, Namrata, Kaushiki. Can anybody tell which department in a bank handles this function of making investments? Yes. Yes, guys, come on. Yes, Jay, you are right. As I was alluding to you earlier, this department is Treasury Department. which handles treasury operations of a bank. So the function of treasury department is to make investments and to handle forex, foreign exchange mainly. Okay. So therefore, when auditor has to verify investments, then he has to verify working of which department? Treasury department. Okay. So what would be when an auditor is doing is verifying investments? So what is his approach? His approach is to verify about the existence, ownership, and valuation of investments. These three assertions he is concerned about. Okay, and all his audit procedures would be tailored around verifying these three assertions about existence, about ownership, and about valuation. तो इन्वेस्टमेंट में तीन ही चीजें हो सकती हैं, that these should exist as on the reporting date, and whatever is reflected in the financial statements, these in fact exist, and these in fact are owned by the bank. Okay, and these are valued properly in accordance with the regulatory guidelines and in accordance with the accounting standards. Okay, clear? So the auditor is concerned about existence, ownership, and valuation of the investments. So students, you have to understand that functions in the treasury department, these are fairly automated these days. These are automated. So the auditor's approach revolves around first testing the controls which are operating in this automated environment. Okay, and also after testing the controls, also apply substantive procedures. Okay. So students, I'll also a little bit explain to you about the functioning of the treasury department, so that you can understand what type of controls are operating in treasury department. Say bank wants to invest in some securities. Okay, then what are the steps? The request for trade has to be initiated. Okay, then it has to be executed, settled, and its accounting done. So these are the parts. So in treasury department, the concept of segregation of duties is very important. So all these functions are being performed by are being performed by different different sort of personnel. We can categorize these functions into three categories, like front office, middle office, and back office. Front office operations, middle office operations, and back office operations. So front office operations are also known as dealing room operations. So which are who are actually in the front, requesting for trade to be initiated, these kind of things. When you are putting orders for something, okay, so this function is performed by front office people. And middle office, it carries out a sort of risk return analysis type of things. And back office is engaged in settling the transaction and accounting part of it. So all this process is now fairly automated, and when say a request for trade is initiated, it is also settled through a STP process, through a straight through process, and only exceptions are pointed out by the back office. Okay, so all these aspects, what are the IT general controls operating in this respect, these have to be verified by the auditor. He can test check few controls operating in this regard. He can in this way he can obtain assurance about the operating effectiveness of controls. Okay, so one thing is this about testing the controls regarding working in the treasury department. Clear students, is that clear to you? Yes, tell me, is that clear to you? For this purpose, he can as I've been telling you, he can go through all the process by conducting a walkthrough. Walkthrough means gaining understanding, just going through that process so that he comes to know what is the working. So students, like this is a word, walkthrough. So you have to remember such type of words. Okay, so that while writing your answers in the exams, you write something specific, so that the person who is checking your papers, uh, he knows that you have got some knowledge, that you have read, you are well read about this subject, that you are not writing the things very generally. Okay, it would help you in fetching marks. So clear, guys? And then what about substantive procedures? Now the auditor, he would be concerned about the fact that whatever investments are appearing in the balance sheet of bank, these in fact exist. Okay, these in fact exist. So how we can check this? He would be asking for the statement of holdings. Okay, And if say he can also ask for independent confirmations in accordance with SA 505. So normally, and students, you have also to keep in mind that these investments which are in form of government securities, these are held by a depository, and which is also a repository of government securities. It is called as Public Debt Office of RBI. Public Debt Office of RBI. PDO. So what is written in your module? PDO, the full form of it is Public Debt Office of RBI. Okay, so banks can have their investments with PDO either in physical form, okay, or in demat form, in paperless form, in electric form, like shares are held in demat form. So in case the securities are held in physical form, then a stock certificate is given by the PDO office. Okay, and if these securities are to be transferred, then these can be transferred by way of executing a transfer form. But when these are held in demat form, these can be transferred in a paperless electronic form. Okay, and say the auditor has sent for external confirmations with the say PDO office, and no reply is forthcoming, then auditor can also ask the concerned bank personnel to download the statement of securities from the CBS platform of RBI, which is eKuber. It is the CBS platform of RBI, eKuber, from which statement of holdings can be downloaded. Okay. Yes, Jay, you are right. So clear, guys. So these kind of procedures he can adopt. And students, as for so when existence is proved, ownership is also proved simultaneously, because obviously these would be in the name of the banks. Okay. And what about valuation? Before we come to valuation, I would also like to touch upon the concept of classification. So students, you have to understand that investments made by bank fall securities in the securities fall in three categories. These are held to maturity, HTM for short. Okay, and one is held for trading, HFT, and third is available for sale, AFS. Okay, so just go through these names, guys. These are important. or also there in your module? Yes, just familiarize yourself with these names and tell me what do we understand about these names. So what are held to maturity? So these are the investments which are, as the name suggests, these are held till maturity. Okay, till their maturity, till they are due, till they are redeemed. What is their tenor? Okay, and held for trading. These are investments just held for making gains, like in the movement of prices, like in the movement of interest rates. And one important thing for these securities under this classification held for trading is that they cannot be held for more than 90 days. As per regulatory guidelines, these have to be sold within 90 days. Sold within 90 days. Held for trading. Okay. And what about available for sale? Securities which do not fall in these two categories, 1 and 2, these fall in this category, available for sale. Okay, so this much you have to learn. Why we are learning this classification? Because this classification is required to be disclosed in the balance sheet of a bank. Banks have to give a breakup of their investments in their balance sheet on these lines. Say, and one more important thing, guys, when bank is making investments, it is decided at that very time. When a bank is purchasing securities, it is decided at that very time whether this security is and is going to be HTM, HFT or AFS. Okay, so it is decided at that very time. Clear, guys? And say if there is any shuffling between the categories, then you have to understand that much, that it has to be in accordance with the limits prescribed by regulatory guidelines prescribed by RBI. So this much you have to understand. And there is one more concept of guys, like what we had studied in advances. There is concept of, like in advances we had studied the concept of non-performing assets, which you are very familiar. So there is a concept of non-performing investments. Non-performing investments. Okay, so what are non-performing investments? What are non-performing investments? Yes, any intelligent guesses? What could be the meaning of non-performing investments? Yes, Namrata, you are asking how the auditor would ensure that classification is done of investment is done properly or not. He would go through the papers when the orders were placed. He would also see investment policy of the bank. Okay. So what are non-performing investments? Yes, any intelligent guesses? Yes, all of you are right. Non-performing investments are those investments which do not generate income for bank. Say bank has invested some money in securities, okay, and say the interest is not coming, or when the redemption proceeds are due, these proceeds have not come. Okay, so if the general basic yardstick is the same as in case of NPAs. So if the interest or principal is not coming for more than 90 days, it then it is called as non-performing investment, NPI. Okay. Clear, guys? And regarding all these securities, students, you have to understand three kind of securities which we have considered: HTM, HFT, and AFS. There are different evaluation rules. There are different valuation rules. You have not to go in detail about these things. You have to just to understand that these securities have been valued in accordance with the regulatory guidelines. This much. Okay. Okay, students, clear. So what can be the audit procedures if we summarize in relation to investments? What can be the audit procedures? Yes, guys. So first of all, the auditor would see whether the bank has a board approved policy for making investments. And also to see whether this policy is in accordance with regulatory guidelines. So whether policy doesn't violate uh, guidelines prescribed by RBI. Okay. And another important thing, he would be saying income recognition, that all investment income is properly accounted for. All investment income is properly accounted for. Okay. Physical verification of investments, like we have already seen, he can verify these by actually physically verifying the securities, stock certificates, or by verifying statement of holdings, downloading statement from eKuber, which is CBS platform of RBI. So such kind of things. Okay, and classification, he would be seeing classification, whether these are classified into all the three categories, and whether shifting is as per RBI norms. Same in relation to valuation, and whether the investments have been classified in accordance with the non-performing investment norms. Okay. So these are some of the basic things which the auditor is concerned about. So guys, this topic is also very wide and very deep, and whatever we have discussed in these 40 minutes about investments, even if you learn about these things, then you can easily handle any question on investments in the paper. So what generally happens is that students, as I have told you, that every time new questions are coming in your exams. So most of the students, they would be leaving this topic, investments, because rarely some question has come in recent years from this topic. I don't think in last 5-6 years a question has come from this topic on investments, but there is no guarantee it will not come. So even if you have a basic understanding or idea, then you can easily handle the question. So very simple questions would be coming from this topic. Okay. Yes, Janvi, this topic is very wide, as I have told you, and it would not be possible for me to, keeping in view constraints of time, it would not be possible for me to explain to you each and everything in a greater detail. You can just remember that HTM securities are those which are held till maturity, and HFT which are those which are used by bank to gain profits because of the movements in their price or because of the movements in interest rates, and AFS category which does not meet any of these two criteria. Okay, which does not meet any of these two criteria. Say at the initiation of trade, it is not decided that this security is for obtaining advantage on price movement. Then it may be marked for under AFS category. Okay, clear? Yes, Janvi. So similarly, so guys, now you have gained a broad understanding of the working of Treasury Department and about the investment function in a bank. So you can very well handle any question on investments pertaining to concurrent audit also. Okay, say if concurrent audit is happening of the Treasury Department, then what the concurrent auditors will have to see? What the concurrent auditors will have to see? Okay, so all these things which we have discussed, these are the type of procedures which the concurrent audit would be deploying as part of his job. Okay. Yes, guys, clear? So let us also go through your module in respect of investments. What does your module say? The primary objective in audit of investment of an auditor is to satisfy himself as to existence, ownership, and valuation. So three things you have to remember: existence, ownership, and valuation. So examination of compliance with statutory requirements is also an important objective of the audit of investments. So these things you do not have to forget. These are the basis: existence, objective, and valuation, and compliance with regulatory guidelines while verifying the investment function. Because why? Because it has got material effect on the financial statements. It can lead to misstatements. Okay, so the auditor has to see, he has to verify the investment policy of the bank first of all. First thing is for him is to verify the investment policy of the bank, and to see it should be drawn in accordance with the regulatory guidelines. So this is the one basic thing. This is the basic audit procedure in relation to verification of investment, first step. Okay, then internal controls. Then come internal controls. Internal controls I had told you in quite greater detail. Okay, so one control is that the policy conforms to regulatory guidelines. Another is segregation of investment functions. Okay, like we had discussed about front office, middle office, and back office functions, that these functions are segregated. So I have already explained to you what do we mean by front office, middle office, and back office. So front office initiates trade, back office is concerned with settling it, and accounting, it looks after accounting part of it, and middle office is doing sort of risk return analysis type of things. So just broadly for creating a picture in your mind. Okay, examination of reconciliation. The same thing we have discussed. Examination of reconciliation with the PDO, Public Debt Office. Examination of documents like who is the competent person to make investments. Now these all things would be flowing from the investment policy of the bank. Okay. Now when the investments are sold, when these are disposed of, then what is the procedure in this regard? These should be verified with the broker's bill, with broker's contract note. Okay. Physical verification. Physically verifying the investment scripts. This we have already discussed. Verify investments held with the PDO office of RBI. So this is also one of the important points. See, this is a specific point. Say when you write in audit procedures, if you write this name, PDO office of RBI, then or you write about e-Kuber site, okay, then examiner would be forced. He would be forced to give you marks. When he would be checking your paper, he would be forced to give you marks. This you can take it from me. Okay. Because you are writing specific points. So independent balance confirmation requests can be made in accordance with SA 505. In case these confirmations are not received back, alternative audit procedures like getting bank personnel to download investment statement from e-Kuber for government securities. Okay, e-Kuber is the CBS platform of RBI. So these kind of things. And there is also a term in your module, that is BR, bank receipts. Say students, sometimes it's it may happen that a bank is holding some, say, sort of allotment advice in respect of some securities, but these are not yet registered. Okay. So what is it's holding? It is holding some sort of receipt. Okay. So these are called as BRs, bank receipts. So in case these are actual certificate is not there, so BRs can be relied upon. And one more term is there, students, that is SGL, subsidiary general ledger, which is there in your module. So this is also a type of account which select entities can open with the PDO, where securities, government securities can be held in the demat form. Okay, so it is a simply a sort of ledger account, subsidiary general account, where securities can be, government securities can be held in dematerialized form. Examination of classification and shifting. Examine that entire investment portfolio of bank is classified under 3 categories. That is HTM, HFT and AFS. And shifting of securities is as per regulatory norms and laid down policy. So this is the important point. This much you have to remember. Okay, detailing of this is not in your syllabus. As I have been telling you, this is a very, very wide topic, and so keeping in view content of your syllabus, these things have just been touched upon. Okay. So I have already explained to you meaning of HTM, HFT and AFC. Although it is not in your module, I have explained to you. Examine whether the shifting of investments from available to sale to held in maturity is duly approved by board of directors. So any shifting, it should be in accordance with the regulatory guidelines and in accordance with the approvals. You have to remember this much. And these are the things relating to valuation, which we have discussed already. And one more thing, students, it is quite possible that bank is also dealing in securities on behalf of others. So this is a separate portfolio which is known as portfolio management service on behalf of clients. Here bank is not making investment of its own money. Okay. But it is holding securities on behalf of the clients. It is managing portfolio on their behalf. Okay, so it is also to be verified that a separate account is being maintained for investments made on the behalf of PMS client accounts. Okay. And also banks should undertake half-yearly reviews of their investment portfolio. These reviews should not only cover operational aspects, but also clearly indicates what amendments have been made to the investment policies. And the concurrent audit of treasury transactions and report should also be placed before the highest authority, that is CMD of the bank, every month. Okay. So again the same thing. So guys, the point is you have to first, while doing a subtopic, you have to understand it, gain a knowledge about it, then controls, procedures, duties of concurrent auditor, steps to be followed by statutory auditor, these would follow automatically. These would follow automatically. These things would follow automatically. Yes, students, is that clear to you? Investments is clear to you. So let us move to next topic. Yes. Now this is next topic. Topic is fixed assets. Now it is also general audit procedures which are there in case of any other entity. These also apply here with some special considerations which are applicable to banks and which are there in Banking Regulation Act 1949. Okay. So what are the classification requirements for fixed assets in the balance sheet of bank? Now, third schedule to the Banking Regulation Act 1949, it states that fixed assets are to be classified into two things. One is premises and one is other fixed assets. So just plain simple two things. Fixed assets of bank are to be classified into two things, that is premises and other fixed assets. Now premises, what do we mean by premises? Premises means those premises which are owned by the banking company and which are used for its purpose of business. That you have to understand. That which are used for its own purpose, and it includes the residential premises where the employees of bank are staying. Okay, not only business premises but also residential premises which are owned by the banking company and which are used by the employees of bank. These are also shown under the head premises. Clear? Fairly simple. And what is included in other assets in the context of bank? Yes, what could be included in other fixed assets? Now these include such type of things like office equipment, like computers, office equipment, say generators, okay, UPS. So all these kind of things are included in other assets. Motor vehicles is also one of the important constituents of the other assets. And if the assets have been taken on lease and intangibles, although these are not required as per classification norms in the Banking Regulation Act, but in terms of accounting standards, these needed to be disclosed separately. Okay guys, clear? And students, one more important thing you have to remember in relation to fixed assets is that Banking Regulation Act does not prescribe the rates of depreciation. So Banking Regulation Act 1949 does not prescribe the rates of depreciation. So in the context of banks, then what would happen? Then you would have to go to Schedule 2 of Companies Act. Schedule 2 of Companies Act, which prescribes useful life of assets. Okay. And another important thing, students, you have to remember is Section 9 of Banking Regulation Act. This is also very important. Section 9 of Banking Regulation Act, it prohibits a banking company from holding any immovable property for a period exceeding 7 years from date of acquisition, except when it is required for its own use. Say students, a bank may be acquiring some assets as part of its business, like say some property might be sold because the party has turned defaulter, account has turned NPA, and the party is not willing to pay. The bank has say purchased some immovable property. It itself has purchased some immovable property in lieu of satisfaction of claims. Say some buyer is also not forthcoming, then it cannot hold it for a period exceeding 7 years from the date of acquisition. Okay, except when it is required for its own use. So if it is required for its own use, then it's okay. If it is not required for its own use, then it cannot hold any immovable property for a period exceeding 7 years. Okay. Clear? And students, in case of banks, fixed assets are normally purchased by the head office or by the controlling authorities, by say circle office authorities or zonal office authorities. Orders in respect to these are generally not placed by the branches. Okay, so what the approach of auditor? Yes, Jay, very good question. So you have to remember, Jay, that Banking Regulation Act 1949 is governing legislation of banks. So Banking Regulation Act 1949 applies in case of banks. However, Companies Act 2013 also applies so far as it is not inconsistent with any provisions of the Banking Regulation Act 1949. Since there are no rules or provisions in Banking Regulation Act 1949 relating to depreciation, so therefore we are looking towards Companies Act 2013. I think the relevant section in Companies Act is Section 2, but I am not sure. It would have to be checked it up. So where it is written that it is also applicable to banking company so far as its provisions are not inconsistent. So students, I've been telling you that fixed assets items are generally purchased by head office of banks and or by the controlling authorities, and they are placing orders and they are maintaining all records. Okay, so there is some sort of centralization there, and some banks have also installed a sort of software, fixed assets management software, recording of purchase, acquisition and disposal of various items of fixed assets, and the audit procedures are designed accordingly. Okay. So important point you have to remember is that Section 9 of Banking Regulation Act prohibits a banking company from holding any immovable property which is not for its own use for a period exceeding 7 years from the date of its acquisition. This is one of the key point, students, you have to remember. So all the audit procedures and internal control areas, the general things, internal controls, the auditor has to check the system of internal controls covering how the expenditure is, how controls are operating over expenditure on fixed assets. Say it could be possible that some of the assets are outrightly purchased, some of assets are self constructed by the bank also. Okay, yes, Namrata, you are saying section 2. Probably you have checked. So so I think I was not wrong. Okay, so these days to save costs, the contract may be given by a bank to certain contractors in case of assets which have been self-constructed. So all these bills, all those agreements, all those contracts would have to be gone through. And in the case assets have been purchased outrightly, then you have to examine the documents pertaining to title of those assets. And in respect of premises, you have to check the schedule, opening balances, and fresh acquisition. Simple general audit procedures which are applicable to any other entity also. The self-constructed fixed assets I have already told you. And in case of leasehold assets, we had discussed that although these are not required to be disclosed separately in accordance with Banking Regulation Act 1949, but in terms of accounting standards, these should be shown, and any capitalization and amortization of lease premium, this should also be examined in relation to terms with the accounting standards. Okay, so these are all general audit procedures which are applicable to any other entity. These are also applicable to banks. Okay. So I shall be highlighting only those procedures which are specific to banks. So there is not much. All the procedures are general in nature. You can go through your module. So one important point which is not in your module, this I have already told you about depreciation. Okay, about the depreciation. So now also let us go through LFAR also and see if it requires from an auditor to comment upon fixed assets. Let us see. Let us see if it is asking something in respect of fixed assets. No, there is not much in LFAR about fixed assets. Okay. Now, yes, guys, are you in a mood to do some questions, to do some MCQs? So later on, the remaining topic about other assets we shall be doing thereafter. So yes, are you ready for some MCQs? Yes. Which of the following statements is false? Yes, tell me. Which of the following statements is false? Four statements are given. These statements broadly relate to NPS. Now, study the statement carefully, students. Study all the statements carefully. Yes, what should be the answer? Only Namrata and Kaushiki. The question is asking which of the following statements is false. Namrata, how you are writing true? You have to give the answer which is false. Yes, which of the following statements is false? Now, Namrata, you are writing A. I don't know whether you are giving answer or just writing it as such. And Janvi, you are writing D. And Koshki, you are writing C. And what about J? You have not written anything? So, students, we take these statements one by one. Standard assets require provisioning in financial statements of a bank. This statement is also, this is true statement. I had told you yesterday that a certain minuscule percentage, say 0.25% or 0.4540%, depending upon the risk weighting and depending upon the differentiating norms, a provision is also required for standard assets also in the financial statements of a bank. So this statement is a trap laid because many students would just by seeing this, and those who are not well read, they may opt for this option. Okay, because they fail to recognize that in the financial statements of bank, provision is also required for standard assets. So this is true. And what about second? Partial recovery of overdue portion cannot lead to upgradation of an account. This is also true. For upgradation of an account from NPA to standard assets, total recovery of overdue amount has to be there. Say if overdue amount is 20 lakhs, then if party pays 10 lakhs, it can't be that after paying 10 lakhs, his account would be upgraded. So this is also true. It cannot lead to upgradation. And now we come to D. In sale of NPA by bank, entire consideration has to be received upfront. This is also true. You know that NPA can't be sold on a contingent price. The price has to be received on upfront basis. So what remains is option C. This is false. This is the right answer. On restructuring of a loan account which is already NPA, it is downgraded, resulting in change of category. When an account which is already an NPA, it is restructured, then it remains in the NPA category. There is no change in category. Okay. However, if there is an account which is standard asset and which is restructured, then it results into change in category from standard to NPA. Okay, so C is the right answer. Kaushiki and J, you were right. Namrata and Janvi, I think you have understood now. Yes. Yes, Namrata and Janvi, have you understood? Yes. Now we come to question number 2. This is a simple mathematical question of computation of drawing power. Now compute drawing power in the given situation. Compute drawing power in the given situation. Yes, guys. Compute the drawing power in the given situation. Yes, students. Yes, are you able to make a little bit of calculation? Yes, guys. What is the correct drawing power in question number 2? What is the correct drawing power in question number 2? Only Namrata survey. Only she has answered. What about Janvi, J, Kaushiki? Yes, still calculating. Yes, searching for calculators. Come on, guys. Yes. Yes, Kaushiki, Janvi. And J. Yes, what is the correct drawing power? Yes, I would explain to you once again, Namrata. But first, let others also answer the question. Yes, guys, are you able to do it? Yes, tell me, are you able to do it, or should I explain? Yes. Yes. Jay and Namrata, both of you have answered correctly. Now, and Namrata is also asking me to explain the difference between sanction limit and drawing power. Again, I will explain, Namrata, although I had explained yesterday also. So, what is drawing power? What is drawing power? So, say in this case, borrower has got a sanction limit of 1 crore, CC limit of 1 crore. Okay. So, drawing power basically means the amount to which a borrower can draw the money. Say, although the bank has sanctioned the limit of 1 crore, what amount of actual funds the borrower can draw depends upon his drawing power. Okay. So you understand what do you mean by drawing power? And drawing power is usually calculated every month or say every quarter, depending upon the terms of sanction letter. Okay. So it is calculated on the basis of value of stocks and value of book debts if cash credit limits have been sanctioned against both, against hypothecation of stock and book debts both, and if cash credit limits have been sanctioned against hypothecation of only stocks, then only against value of stocks. So how drawing power is calculated? It is calculated on the basis of value of paid stocks, that is stocks less trade creditors, paid stocks. So total stocks say as on date is a figure and creditors as on the date is so much. Balance what we come is balance what we obtain is paid stock. So and from paid stock margin is reduced. So margin is what is stipulated in the sanction letter. And similarly, in case of book debt, sometimes a higher margin is stipulated. So in that case, higher margin is deducted. Okay. So Janvi, the meaning of drawing power is clear to you. Now in this case, the borrower has got sanctioned a limit of rupees 1 crore. Okay. So value of stock as on 30th April is 50 lakh. And creditors are rupees 20 lakhs. So paid stock is 30 lakhs. And less margin for stock stipulated is 10%. So it is 3 lakhs. So drawing power in respect of stocks is 27 lakhs. So this is one portion. But the limit is also against book debts. So what is the value of book debts? Book debt value is 1 crore as on 30th April. So less margin 40%, that is 40 lakhs. So balance is 60 lakhs. So drawing power for book debt is 60 lakhs. So total drawing power is 27 plus 60, 87 lakhs. Yes, Janvi, is it clear to you? So although in this case the party was sanctioned, the borrower was sanctioned cash credit limit of 1 crore, but based upon his stock statement for the month of April 23, his drawing power would be fixed at 87 lakhs. He would be able to use the funds to the tune of rupees 87 lakhs only. And it is not that once drawing power is fixed, it is permanent. Say if his stock changes, obviously which it would, in the next month, he would give a fresh stock statement. Okay, and in that stock statement, his drawing power may be more or maybe less. So clear students. This funda of drawing power should be clear to you, students. Number 3. Yes, Namrata, you are asking sanction limit fixed on which date? Sanction limit is as per terms of sanction, as per sanction letter. When the bank is sanctioning the limit, when the bank is sanctioning a loan, the bank is saying that we are willing to lend you the funds to the tune of rupees 1 crore, but subject to these conditions, that that drawing power should also be there. It is sanction is based upon the credit appraisal, which the competent authority has sanctioned, Namrata. Yes. Which of the following is not a classification category for investment in financial statements of a bank? Yes, held to income. It is very simple. All of you are writing. This is not a classification category. All 3 are classification category. Yes, Namrata, Kaushiki, you are saying this drawing power is for month of May. Obviously, Namrata, stock statement is on date of 30th April. Okay, so normally as per system of banks, it is required to be submitted in banks by the by say 5th or 7th of next month. So when it is submitted in the bank by 5th of May, so the limit would be there for the month of May. Okay. And Namrata, she is also asking, it means at sanction time or sanction and renewal. I have already told you, Namrata, that renewal is also a sanction. The difference between sanction and renewal is that sanction, we use the term sanction normally when it is granted for the first time, and when that facility is simply renewed next year, then also a letter is given which is also same as a sanction letter. Okay, but the process is known as renewal. So after 12 months, when renewal is done, again the sanction letter is given, but this process is known as renewal. Okay, so renewal is also a sanction. Yes, yes, clear to you, Namrata? Yes, yes, tell me. Now, 4th question, yes. EMI in a loan account was due on 31st May 2023. The borrower did not pay the amount by that date. It means that what? EMI in a loan account was due on 31st May. The borrower did not pay the amount by that date. It means that now what does it mean? Where's only Namrata and Kaushiki? Yes, Janvi and Jay. What about you? EMI in a loan account was due on 31st May. The borrower did not pay the amount by that date. It means that, yes, Jay, you have not responded. Yes, guys, I told you yesterday that overdue means that a facility becomes overdue when it is not paid on that date. When it is not paid on that date. So EMI in loan account was due on 31st May and it was not paid on that date. So it becomes overdue on that date. So answer is D. The loan account has become overdue on 31st May. Kaushiki has answered right. Jay, you have also answered right. I told you yesterday when the day close command would be run, so that account would be tagged as overdue on 31st May itself. So this is also one of the advantages of automation. So, and you have not to confuse overdue with NPA. If some facility is overdue, it doesn't mean that it necessarily has become NPA. If it is overdue for more than 90 days, only then it will become NPA. Overdue is a sort of irregularity. So option D is the right answer. So all other are given to confuse you. So is this point clear to you? Yes, Koshki probably remembers what I had said yesterday, that when day end command is given, so the account would be classified as overdue as on that date, itself, because the time has elapsed, the party has not come forward to pay the amount, to deposit the EMI on that date. And by the definition of overdue, uh, and if a facility becomes overdue if it is not paid on that date. Okay. Now number 5, what is meant by cash retention limit in case of branch of a bank? Yes, fairly simple one. What is meant by cash retention limit in case of branch of a bank? Yes, guys. Fairly simple, direct question. What is meant by cash retention limit in case of branch of a bank? It is the amount, prescribed amount of cash which a branch can hold. Okay, Janvi has answered rightly. So the answer is option D is the right answer. Okay, so these are the some type of questions. Hope guys you are able to gain an insight into the type of questions. These are not very difficult. These were I would say easy to easy plus type of questions. These were not difficult type of questions. Okay. And Koshki, you are writing why not 5C? it is the minimum retained amount for meeting branch expenditure. No, the cash holding Koshki, cash holding is not for the meeting branch expenditure. You have to see it is for meeting the requirements of customers. So branch would be making a little expenditure by way of cash. All the expenditure which are in the nature of office expenses or establishment expenses, these are all would all be met through checks, would all be met through banking channels. The how you can think that a bank can incur its own office expenditure, major part of it in cash, only little few hundred or 1,000, 2,000 rupees it would be incurring in cash. Otherwise, all the payments would be through the banking channels. So cash holding is just for meeting the requirements of the customer. Say, as on the end of the day, the branch is having cash of 10 lakhs. Okay, so tomorrow morning, when some customer comes and he wants to withdraw the money and somebody has not deposited, say customer comes and to withdraw rupees 5 lakh. So bank would be, branch would be having that much of money. Yes. Understood now, Kaushiki? Have you understood now? Yes, she is saying super clear. Okay. So fine enough, guys. So before starting residuary head of other assets, let us take a short break of 10 minutes. Okay. So break for 10 minutes. Yes, guys, break for 10 minutes. Yes, welcome back, guys. So now we come to a residuary category of other assets. So what is included in other assets in the balance sheet of bank? First thing is this head inter-office adjustments. Okay, so we are talking in assets category. So obviously this is on debit side. So examine whether inter-branch accounts are normally reconciled at the central level. So all reconciliation of inter-branch accounts should be there at the HO level, at the central level, and the auditor has to see whether there are some outstanding entries, long outstanding entries in the inter-branch accounts. What is their nature? Why these entries are outstanding? So, and this process has also been done in an automated way in recent times. So the auditor can check out all those reports, and he can see that to which branches these outstanding entries pertain by seeing their codes, by seeing the branches codes, and if there are any long outstanding entries, he should see how these have been accounted for. Okay. And interest accrued. So guys, as you know that interest income is recognized on accrual basis in case of financial statements of a bank, except in case of NPAs. Except in case of NPAs. So only those income is recognized as under interest accrued, which is in fact collectible, for which there is no uncertainty about its collectability in accordance with accounting standard AS 9. Okay. For tax deducted at source, so it might so happen that that in respect of certain incomes, okay, tax has been deducted at source, like say in case of some dividend income, some interest incomes, TDS has been deducted. So normal audit procedures apply, usual audit procedures apply. The auditor would check form 26AS and all TDS certificates. There is another item, stationery and stamps. Students, now can you tell why stationery and stamps is shown here in assets? Shouldn't it go to profit and loss account? Yes. Without seeing your module, yes, just by common sense. So guys, it is due to the reason, it is because of the fact that that sometimes stationery and stamps constitute very heavy expenditure for the bank as a whole. Okay. It might entail expenditure, bulk expenditure on printing of stationery, on printing of security papers. Okay. So the management may decide to treat it as a capital expenditure, and it is may try to treat it as an asset, and may decide to write it off over a period of time. Okay, instead of charging straight away to profit and loss account. So the management may adopt a policy to treat it as an asset, and it may be written off over a period of time, because expenditure might be quite high. Okay, so it is quite possible that in case of a bank taken as a whole, the expenditure on stationery and stamps, this is very high. Okay. So this has to be ensured, and evaluate the existence, effectiveness, and continuity of internal controls over these items. Okay. And say if branch auditor was required to comment on LFAR on stationery and stamps, then what are his comments? And for branch auditors, they have to physically verify the security items like number of checkbooks, demand draft books. These are all security items. So nowadays, like DDs are not common, or pay orders are not common due to prevalent IMPS or RTGS NEFT, but still such books are lying with the branches. So the branch auditor, the statutory branch auditor, would be verifying these security items, and checkbooks in any case are always there. These are also with the branches, and these are also at the centralized offices. And if out of this huge expenditure, if some amount has been consumed, that to see that this amount is charged to profit and loss account in accordance with the accounting policy followed by the bank. Okay, so simultaneously we also see what are the LFAR requirements in respect of stationery and stamps, whether they are there are or there aren't any. No, there aren't any. There are no such requirements. Okay. And now next item is non-banking assets acquired in satisfaction of claims. Non-banking assets acquired in satisfaction of claims. Now, this point I had also discussed while we were discussing about premises. Like a bank may get to acquire some immovable properties, some assets in lieu of satisfaction of its debts. Okay. And what is the duty of auditor in this regard? Then section 9 comes into play. What we had discussed, that these assets should not be held for a period exceeding 7 years, except when these are for own use of the bank. Okay. So except in the cases where these are for own use of the bank, these assets should not be held for a period of more than 7 years. Okay. So generally such type of assets, why it is so? Why section 9 is there? It is because such type of assets which are not required for banks on use, these would be required for disposing of, for selling off, because the intention of bank would be to sell off and get rid of the debt which is outstanding in its books. Okay. So verify such assets with respect to the title deeds or order of the court, say if property has come to the bank by virtue of some court decree, some court order, then that would have to be examined. Okay. And ensure compliance with Section 9 of Banking Regulation Act. This is what I am harping about twice or thrice. Okay. Ensure that as a date of acquisition, asset should be recorded lower of net book value or advance or NRV of assets acquired. Okay, so if some asset has been required in satisfaction of some debt, in satisfaction of some advance, then it should be recognized at lower of the book value of advance or what is the realizable value of that asset. Okay. And one more point is that check that ownership of the property is legally vested with the bank. The property is owned by the bank. That there are rights accruing to rights of ownership accruing to the bank. Okay, because and if there is some dispute in relation to the title of the property, then the auditor should be satisfied that whether it is appropriate for the asset to be recorded as such in the first place. Okay. And if some dispute arises subsequently, then it is also to be seen whether a provision is required or disclosure of contingent liability is required in accordance with AS 29. You remember, guys, AS 29? Yes, guys, you remember AS 29? So when tell me when a provision is to be recognized and when a contingent liability is to be recognized. Yes. You remember AS 29 when a provision is to be recognized and when a contingent liability is recognized. Yes, Janvi, Koshki, Jay, Namrata, yes. Anyone? As per AS 29, when a provision is recognized and when a contingent liability is recognized. Yes, refresher of your knowledge, guys. Yes, Koshki is writing that when certainty, what certainty, Koshki? What type of certainty? Yes, what type of certainty? What type of certainty? Yes, Koshki, tell me. Yes. Yes, when no certainty of cash flow. Yes, Koshki, yes, you are right. When there is certainty that there would be outflow of economic benefits, when there is outflow of cash flow, then provision, and if there is no certainty, so thumb rule, then it would be a contingent liability. Yes, Jay, if sale of NPA is more than at book value, then the excess is used to meet shortfall in provision of other assets. Okay. And now we come to another residuary head. It is others. So this others is within the other assets. So this others is within the other assets. So within the other assets, there is a residuary category of others. Okay. So what are these others? Like non-bearing staff, non-interest bearing staff advances. Like advances are given to the staff of the bank which do not carry any interest. Okay. So these have to be verified. So general audit procedures apply. Examination of the names of such employees and all that. And suspense account. One more important account is suspense account. So suspense account. So guys, what is included in suspense account? These items also usually you would find in the accounts of in the financial statements of the branches and in the bank as a whole. So what is suspense account in case of bank? Say guys, some branches make some payment. Okay. But at the time of making payment, they are uncertain about the nature of payment. At that in which head it is going to be accounted for. There is no clarity, say there is no clarity from head office, or the nature of payment itself is such that at that time it cannot be ascertained that what is its nature, what sort of expenditure it is, or the party to whom payment is made, to which head it should go. Okay. So such entries go to suspense accounts. Okay. Or say some fraud has occurred, or that is recoverable amount from some identified person. So that also can be debited in suspense account. So such kind of things. So what the auditor has to see in suspense account? He has to see that there are no old outstanding entries in suspense account. So it is a sort of temporary account for parking, sort of parking account. So where you park the things temporarily. It is not meant to be used permanently. So the auditor would be seeing whether there are any outstanding entries which in fact may be requiring write-off, which may be, for which it may be required to write off those entries. So this is the duty of auditor while verifying suspense accounts. And another point he has to remember while verifying suspense accounts is that sometimes suspense accounts might be used by unscrupulous employees to commit frauds, like to make payments, to grant unauthorized accommodation to certain borrowers. Okay. So these kind of things would have to be reviewed, would have to be verified by the auditor. So clear, guys? So we have done all major things as far as audit approach and audit procedures of relating to verification of assets in financial statements of a bank are concerned. Okay. So again, I am repeating it. We have done audit approach and our audit procedures about cash, about balances with RBI, about bank balances, about investments, about advances, okay, about fixed assets, and about other assets. So one point, guys, probably we had left while doing cash and bank balances. There was also a point regarding money at call and short notice. So this was inadvertently left out. So what is money at call and short notice? So this is also dealt by at the actual level, form of treasury operations. So when bank lends money to other players in the money market for a short period, say for a day, for a or up to a period of usually up to period of 14 days. So this is a call money. So bank the players in the money market, they it is it is normal for them to buy money, to buy funds and to lend money. Okay, they borrow money and they lend the money. So sometimes during a day one bank is in need of funds, it may borrow from another bank or from another FI. Okay, so these type of transactions are fall under the category of money at call and short notice, which are to be liquidated either on the same day or say within 14 days. So if there is any money at call and short notice, it has to be verified in accordance with the by taking the confirmation letters from the, and also it has to be seen whether interest has been accounted for. So these type of general things has to be seen, and what is the control, internal control operating uh, in regards to undertaking such type of transactions. So clear to you guys? So now we shall be coming to the liabilities part. Now we shall be coming to the liabilities part and other remaining portion which we shall be doing in our next class. That is remaining to CRR, SLR, capital adequacy ratios. Okay, so we shall be discussing about capital and these ratios, CRR, SLR, and capital adequacy ratios and other concepts while we are doing while we are doing audit approach and audit procedures in relation to capital. So today we shall be going through audit approach and audit procedures about deposits. Okay, so let us do deposits first. Yes, deposits, guys. We are at page number 9.40 of your module. Now deposits, as students, now as advances are the one of the most important items in balance sheet of a bank on the asset side. Similarly, deposits are the most important items in the liability side. So why? Because deposits are the one of the important sources of funds for a bank. It is only by accepting deposits that bank further uses it for the purpose of lending funds, for the purpose of lending money. So deposits can be basically categorized in two types, that is demand deposits and term deposits. Okay. So what are demand deposits? Yes. Do you have any idea, guys? What are demand deposits? Yes, I ask you a simple question. All of you must be having a saving account with some bank. Okay. You must be getting your stipend also in your saving bank. So what type of deposit it is? Yes, what type of deposit it is? It is a demand deposit. Why? Because you can withdraw money anytime you need it. It is repayable on demand. Okay. Similarly, current accounts. Now, what is current account? So what is the difference between a current account and a saving account? Yes. Anybody? Yes. Basic understanding, guys. And tell me whether bank gives any interest on current account. And also tell me whether bank gives interest on saving accounts also. Just test your basic IQ level. This should be known to even class 12 students. Yes, what is the fundamental difference between a current account and saving account? What is the fundamental difference between a current account and a saving account? Yes, tell me. Yes, interest is there. Yes, you are writing that in current account no interest is paid. That's okay. In saving account, some nominal rate of interest is paid, say at 2.53% per annum, and no interest is paid in on current accounts. But what is the fundamental difference between a saving account and current account? Yes, Jay. What about you? Jay, Namrata, yes. What is the fundamental difference between a current account and a savings account? No, Koshki, you are writing current account is purely demand deposit, but saving account is also purely demand deposit. You can go anytime and withdraw money. There is nobody to stop you. What is the fundamental difference between a current account and saving account? Yes, Namrata and Jay. Nobody. So guys, this reflects upon our poor understanding of the financial matters. No, Koshki, again you are taking it to altogether different matter. I am talking about fundamental difference in nature about a current account and saving account, between a current account and saving account. So current account is used for business purpose, whereas a saving account is not used for a business purpose. Now you understand? So you can't open a saving account and carry out a trading business and put all your receipts in through the saving account. For that, you need to open a current account. So is that clear? So both current and savings account, these are in nature of demand deposits. Money can be withdrawn at any time, and in saving accounts the banks pay interest, and in current accounts no interest is paid. And current accounts are meant for business purposes, and saving accounts can be opened only by individuals, HUFs, or certain specified entities. Okay. Is that clear? And what are term deposits? And these are also known as CASA deposits. In banking language, these demand deposits are also known as CASA deposits. Now, Koshki is asking who stops doing business from a saving account. So, Koshki, if you are making a number of transactions from your saving account, and regular checks are being credited and paid, when checks are cleared, by seeing the nature of checks, it can be gauged that you are running a business. Okay. So the bank management can object that you are running this account for business purposes. Okay. So if you indulge in some business transactions, say sometimes even during the year, then probably nobody would realize it. Okay, but if there is a pattern, then it can be immediately picked up. So demand deposits are also known as CASA deposits. CASA, current and saving account deposits. And term deposits, you know that these are deposits which are payable to get higher interest. Okay, so like in the saving account, the interest is 2.5% or 3%, and in the fixed deposits, you might be getting interest of say up to 7%. So again, Koshki, the interest is calculated on saving accounts on the balance which you are holding for a number of days, like in case of advances. Like in case of advances, interest is charged on the utilized amount of advance, and similarly in case of deposits, in case of saving accounts, the interest is given to the customers on the balances, on the number of days they maintain a particular balance. Okay. And these term deposits can be for very short term, say from 7 days and up to 1 year, 2 years, or 5 years, or even 5 years. And recurring deposits, RDs, which is a term which you might be familiar with, where a person deposits some monthly amount, say 5,000 rupees per month in his RD account, recurring deposit account, and he pays monthly installment for say for a period of 3 years or 5 years, and after that he gets his principal amount along with interest in the maturity proceeds. So recurring deposits, RDs, these are also a form of term deposits, and there are certain deposits designated in foreign currencies, like deposited by NRIs like FCNR accounts, foreign currency non-resident accounts, NRO, NRE accounts. Okay. So what should be the audit procedures in regard to current and saving accounts? Yes. What should be the audit procedures with regard to current and saving accounts? So, in respect of current and saving accounts, the auditor, what he would do as a statutory auditor, he would verify a sample basis of current and saving accounts opened during the year for adherence to KYC norms. Say, I am auditor, I am branch auditor of a bank, and say I would take a sample of 10-15 accounts in different months, opened fresh accounts which have been opened during the month. So all the accounts, you know, these days, all the accounts, saving and current accounts, these have to be comply with KYC norms, know your customer norms. Okay, all the identification has to be there, like Aadhaar card, PAN card, and in this KYC process, the bank also does a sort of profiling of the customer also. Okay, what is his level of income? So these kind of things, whether it is a low risk customer or whether it is a high risk customer, what is the who is opening the account, whether it is an individual, whether it is a firm, it is a company, HUF, or all these kind of things. And verify that saving accounts are opened in name of individuals, HUFs, and some trusts who are authorized to open a saving accounts. For as I was telling you, businesses are not allowed to open a saving account. Okay, so say there is a firm, there is a partnership firm, or there is a company, it can't open a saving account. It would have to open a current account. Okay. So saving accounts are not opened for business or for professional concern. Okay. The business transactions are carried in current accounts, which can be opened for all kind of customers, like companies, individual and partnership firms. So current accounts can be opened for proprietorship firms, for individuals, for partnership firms, for companies, for running business. And he can also check the samples listing. He can do, he can obtain a listing of the saving accounts. Okay, balancing of the saving account as at the day end, as at the reporting date, and he may verify the balances in individual accounts on a sample basis, and he can check the calculations of interest also on a test check basis. Remember that again the same point, no interest is paid generally on current account by banks. Okay. And one more important thing is that suppose that say J is having a saving account in some bank, and balance in his account is, say, credit rupees 10,000 rupees. So in the books of bank, say ABS Bank, there is a bank, ABS Bank. So J's saving account looks like this. He is having a credit balance of 10,000 rupees. Okay. Say now J is a valued customer of the bank, and his electricity bill for a month comes of rupees 15,000. he doesn't have the money, but say he is a valued customer and he requests the bank, he immediately rushes to the branch. He has already issued a check and he requests the manager to clear his check because it relates to electricity bill. And suppose that manager has got the power and he agrees to J's request. Now what would happen? The final balance at the end of day is debit 5,000. The J's account is debited. So instead of a credit balance in saving account, now a temporary overdraft is created. This we call as TOD in banking language, temporary overdraft. Okay, a temporary overdraft TOD is created. It is just like an advance. So the bank has given you an advance, clean advance, unsecured advance, just to help you out. So you have to remember, students, that managers do not have unlimited power to. They have certain limited powers. Say up to they can grant TOD to a customer, say up to 25,000 or 50,000. Okay, depending upon the powers delegated to them. So the auditor would see that this amount, this debit amount is not netted out of the deposits. It should be reflected separately under advances as a temporary overdraft. Clear? Similar is the case with current accounts. Say if due to some reason a TOD is created in some current account, then it is in nature of advance. It would not be reduced from the deposits of the branch. Yes, Jay, TOD can be allowed in saving account also, and it can be allowed in current accounts also. And it should be shown separately under the head advances. Okay. Although in module it is written debit balance in current accounts, but TOD can also happen in saving accounts also. Okay, and I take it a step further. Say if as a customer the branch manager has allowed TOD in my saving account or current account in good faith, and suppose I do not honor my commitments, okay, and I fail to pay to the bank, then what would happen? Yes, Viraj, you are very late. The lecture is going to end in 10-15 minutes. Anyway, good morning. So what would happen in that case? Yes, guys. What would happen in that case? Say TOD is outstanding in current account, okay, and the customer does not, which the branch had allowed in good faith, and the customer does not pay. Then what are implications for it to you as an auditor? Yes, what are implications for it to you as an auditor? Yes, tell me. Yes, जय नम्रता कौशिकी, थोड़ा दिमाग लगाओ भाई, कुछ थोड़ा सा प्लीज एनालाइज समथिंग. If a TOD is outstanding, now I have explained to you the meaning of TOD. ठीक है, if a TOD is outstanding in say current account and the borrower does not pay, the manager has allowed it in good faith. Now, what are implications for you as an auditor? Yes, yes. Okay, Viraj, you were seeing on mobile, then it's fine. Because since you are probably unable to send any queries, that's why I thought that you are wishing right now. Yes, yes, Koshki, you are right. You are thinking on right lines. So all the regulatory norms relating to NPA would apply. Say if the account would remain, it would immediately become overdue. Say if it is not paid on that date, it would become overdue at the end of the day. So if say it remains overdue for more than 90 days, then what would happen? It would become NPA. So if it remains overdue for more than 90 days, it would also become an NPA. Clear? Yes. Clear to all? Yes. Namrata, Jay, Viraj, is it clear? Yes. And one more important thing which has implications for an auditor is inoperative saving accounts and current accounts. Or dormant accounts. Now, what are dormant accounts? So if there are no transactions in the account for over a period of 2 years, then it is classified as an inoperative or dormant account. Now, what are the implications? And these are separately classified in the schedule of deposits, that this much amount pertains to inoperative accounts. Okay. So why this area is important for an auditor? Because it is a high risk fraud prone area. How? Because fraud can be committed by the bank employees, by the branch management. Say if the bank manager, he knows that this account is operative, nobody is operating this account for say 2 years, say 3 years have gone by. Okay, then this account can be misused to carry out some unauthorized transaction. Okay, so there are strict norms. There are strict norms for reviving inoperative accounts. Okay, again, when an account goes into an inoperative category, in a dormant category, then KYC again has to be done, and a responsible official has to authorize its revival. Okay. Say guys, like say in case of by virtue of in say small cities, the bank managers virtually know their all customers. Okay, so say some customer has died and there is no information on record Nobody has come forward to claim the balance. So, but the bank manager knows that this person is no more, and say some balance is lying, some good balance is lying in his account. Then some fraudulent person, he may forge the signatures and can withdraw the amount by using a withdrawal form. So such kind of things do happen. Okay, so the auditor has to be careful about inoperative accounts. Term deposits. Now this process is also automated these days. So banks generate fixed deposits, and even you can make even you can make fixed deposits online by logging onto your account. If some balance is there in your saving account, you can sweep in it from your saving account to fixed deposit account by yourself, by using net banking. You can yourself create a fixed deposit. You can see for how much period you want to make the deposit, and what is the required percentage of interest which the bank is offering, and you can yourself create your own fixed deposit. A fixed deposit advice would be generated online, and it would be mailed to you, giving the rate of interest, principal amount, maturity amount. Okay. And say there can also be possibility of branch accepting some bulk deposits, say some deposits of 2 CR or more. So like some institutional deposits of some government authorities could be there. So the banks generally provide a differentiated rate of interest to attract these bulk deposits. So the duty of auditor is to see whether correct rate of interest in accordance with the guidelines, in accordance with the approvals of the competent authorities have been offered. Okay. And in case of closure of term deposits, obviously these deposits are for a fixed period. Then if you prematurely close these fixed deposits, then obviously you would have to suffer, you have to pay some penalty. So it is test checked by the auditor that this is being applied. And similarly, similar things can be checked about recurring deposits, and the auditor can also check about on a sample basis about the correctness of rate of interest on term deposits. Say the point here to check would be like rate of interest undergoes changes many times during the year. So say when the rate of interest is changed on say 27th of June, so the auditor would see that whether the correct new rate of interest have been made effective from that date. So that is very important for him to see, because taken for bank as a whole, even a difference of a single day can make enormous difference. Okay. Yes, sweep-in accounts, it can be there. Sweep-in accounts, yes, Koshki, you are right. In sweep-in accounts, it can be that there is no provision of penalty, but when you create a FD from your saving account separately, and it is not a sweep-in account, then obviously you would be charged something. Okay, depending upon bank's guidelines. Deposits held in foreign currency. So there are deposits held in foreign currencies like FCNR deposits. So FCNR deposits, these are opened by non-resident Indians and these are in form of fixed deposit. Okay. So this point you have to remember. And there are NRE accounts and NRO accounts. So NRE accounts may be opened by NRIs and persons of Indian origin, separate category. And these accounts can be in the form of saving, current, fixed deposits. So the duty of auditor is to see compliance with all the guidelines in this regard, whether these accounts have been opened in accordance with the RBI directions, say in respect of FCNR accounts, whether some saving account has been opened, whereas it is not permissible to open saving account for FCNR. Okay, verification of on sample basis, interest, and all the related procedures. And one important thing in respect of deposits is that it is a duty of auditor to see that there is no window dressing for deposits. So what happens, guys? In case of deposits, the branch managements are under a considerable pressure from the head office of banks to shore up their deposits. You would see that bank people, they go on marketing and they go after seeking fixed deposits, term deposits, or they near the end of a half year or near the end of a year, they regularly call the parties to keep some balance in their current accounts. But if these are genuine efforts, then it is okay. But sometimes it happens that that some branch managements, they may indulge in window dressing, sort of unfair practices to shore up their deposits. Like say customer is availing a cash credit facility. Okay, say 1 crore is cash credit facility. He is sanctioned, but he is utilizing his limit of say 15 lakhs. He can utilize up to 1 crore, but he is utilizing for 50 lakhs. Now, what the manager asks him, he tells him to use 50 lakhs for another day. Okay. And out of this used amount, a FD would be created. So what would happen? Bank's advance also goes up by 50 lakhs and FD is also created. Okay. Or say the bank asks to take a loan on FD for a single day. So even if the customer is not cooperating to part with funds, he says, okay, you even take loan on FD or for a single day. And the entry is reversed on 2nd or 3rd April. So the purpose of these entries is just to shore up the figure of advances and deposits as on last date, as on reporting date. So RBI direction says that this sort of practice is to be discouraged. This is not permissible. This is not allowable. This is a window dressing. It leads to inflated deposits and inflated advances. Okay, so it can lead to auditor qualifying his report that the if the amount is material, then the auditor can say that deposits have been artificially shored up. Okay, so there is probably a requirement in LFAR also. So we shall see what are the requirements in LFAR pertaining to these. Yes. In respect of deposits, does the bank has a system of identification of dormant inoperative accounts? So again, the same thing, which is the main, the auditor has to report statutory. No, if there are a large number of transactions, then and these have been reversed on 2nd April. So the auditor can definitely say that these have been done to inflate, because say the deposits of the branch as on 31st March are 100 crores, and on 2nd April these remain to the tune of 80 crores. 20 crores साफ हो गया. If these are genuine withdrawals, somebody has withdrawn the money, but that is also a rare possibility that so much deposits would be withdrawn. The difference would be 1 crore, 2 crores. So these things come with the experience. These depend upon the professional judgment of the auditor. Okay, and there is a specific point in LFAR after the balance sheet date until the date of audit, whether there have been unusual large movements, increase or decrease in the aggregate deposits held at the year end. Okay, so as it after the balance sheet date until the date of audit, say balance sheet date was 31st March and audit is conducted on 10th April, whether there have been unusually large increases or decrease. Okay. So such type of things. So this way, students, as I have been telling you, this way by simultaneously taking all the aspects together by now you can easily write about audit procedures which a concurrent auditor has to apply while verifying deposits. So you have, since you have learned the whole concept of deposits, now auditor, whether it is concurrent auditor or whether it is statutory auditor, you are very much comfortable. Okay, guys. So clear to you guys. So this is for today, and we shall be meeting again for remaining part of this topic, bank audit, for doing various requirements relating to various ratios, cash reserve ratio, SLR, capital adequacy norms, and remaining parts of verification of liabilities which have been left out, and some general concepts. We shall also try to do some more questions, time permitting. Okay, and guys, do send your feedback. Have you found the session interactive? Have your queries been answered? Do give your feedback on the feedback form or in whatever mode you are allowed. Okay, so thank you once again to all of you guys for giving me a patient hearing and patient listening. So thank you to all of you. Okay, guys, it's over for today.